What's up, guys? Today we're diving into AMD and we're going to review the technical charts, fundamentals, and key ratios, different ways to trade this stock this upcoming week, the week of March 1st. I'm Tom, the Action Accountant. I've been in value investing for 15 years and have been educating for half that time, and I'm excited to share my research with you. Let's dive in, shall we? Guys, let's look at AMD. AMD's on a tear. AMD has been competing with Intel for the last couple of years. And then also with NVIDIA on the graphics card front. AMD has been just crushing it in terms of processing power, pricing, and man, I'm struggling. On the processor side, they're really killing Intel. The video card side, while they have been doing a good job, they have not been keeping up with NVIDIA when you look at kind of the new technology and what's been coming out. All that said, AMD does provide really good budget devices that work for what people are after, and they've been selling decently well. Their just high end is just not anywhere near the same as NVIDIA. All that said, AMD's been on a tear for the last 5 years, guys. If you look way back in 2016, when I first started to really pay attention, you could have bought a couple shares of AMD for $2. And I was part of an investment club, and we tried to buy shares at $3, and for whatever reason, for reasons unknown, the trade never went through and we never revisited it. And we missed out on an incredible run from 3 to 15 over the next couple years, and from 15 to 90 over the next 3 years after that. RIP. Yeah, NVIDIA's been trading really well, guys. All right, so let's dial this back just to 3 months, 6 months. NVIDIA's been kind of trading. Let's do 1 year actually. NVIDIA, if you look right, there was a minor dip as part of COVID because the entire market sold off, and it went from 50 down to 40. It's a 20% fall, which was right in line with what Apple did. And basically what people realized was COVID wasn't going to really kill the hardware game, and it immediately recovered. If you really dove in on just this one little section, you'd see it recovered within basically one gap day. Floated for the rest of the summer, had some good earnings at the end of summer, and just completely went bonkers. And then it's been floating ever since. And so that's kind of been the story of AMD. It runs like crazy, floats in a trading window with really strong supports and really strong resistances, and you just try to find those spots to buy. Perfect world, right? You're going to start in a good chart, which AMD is an okay chart. You're going to see higher highs, which we do see, bam, hot, bam, bam, and then higher lows, which we see as well. So bam, 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 and now we've actually seen it start to sell off since January, since 2021. So it kind of falls, recovers, falls, recovers, falls, recovers. From a technical point of view, they're calling this a weak buy because we're actually starting to see the fundamentals break down. All that said, I still really like AMD. I still really like where they're positioned in the market, and how things are breaking out. And so, looking at that, I have been wanting to buy AMD in the 87 to anything under 90 range, right? Anywhere in this kind of weird zone. So I personally entered AMD and sold puts, which we'll review in depth later, at 87, and I got put those shares last week as part of this overall sell-off. Now, I'm not upset. I'm down $3. All that said, I've been trying to accumulate shares in the 80s, and then I'm happy to start selling in the 90s as it recovers. So, if you're looking to do the same, we want to look at some of these support points. We had support at 87, we had support at 85, which we've fallen through, and our next support's 83. So, basically, we're in what I call no man's land, and so this. In general, AMD will follow the market tomorrow. Very, very likely will follow the market. And it will either float its way back up to 85, 50, or 85, 70, or it will float its way down all the way down to 83. If it's a down day, it'll float down. If it's an up day, it'll float up. It's not going to do anything aggressively. I think that's a quick review. I mean, if we take a quick peek at their sales and their kind of what they've been doing over time, you're going to see continued quarterly growth. They can't keep processors in stock. I mean, and you're seeing aggressive quarterly growth. That's 50% higher than last year for the same quarter, which is just wild. That's revenue. And then from an earnings per share, you're starting to see quote unquote aggressive growth. Now this isn't quite true because there was an extra item that drove that up. So it didn't just go from 22 cents a share to $1.47. There was an extra item there that brought that up. Let's see if we can find that. Their operating income was $500, which was double the previous year over year. Depreciation was up, and then they had some extra income, $38 of extra income, or $30 million of extra income. That's something that a special item is something that only happens once and is not going to reoccur. So that had something weird. I wouldn't expect to see this $1.40 going forward, right? I would expect to see in the 60 and 70 cent range going forward. And we could dive into what that looks like from the Earnings Whisperer. They don't have it. They don't even have it yet. It's too far out. And so what I'm doing is I'm going to look at options tomorrow. I got in at 87, so I'm going to be wanting to sell 87.50s or 88s because I want to make even some sort of nominal profit on that floating back up. I'm probably going to look at 87.50s because I want to make 1% of my money. And then that allows it to run back up. And if it closes above 87.50, cool, I'm out for... I held the share for literally 1 week, and I made about 3% of my money in 1 week. And if it doesn't close above 87.50, I can wait one more week and sell at a higher price the following week, which is where I can really accumulate portfolio growth. But that's probably what my trade will be tomorrow. It's just an 87.50 call, trying to sell it for over 88 cents and make more than 1% of my money. And I think that gave you a way to enter and a way to exit. If you were trying to enter the position and you thought like me and said, "Hey, low 80s looks really good," I think we saw 83 was a pivot point. The premium is really high right now because the market's spooked. If interest rates keep going up, you're going to start seeing a continued sell-off, and you probably follow that same route of kind of a max sell-off of 20%. So if it hit if we were in the 90s, low 90s, a 20% sell-off would be about $18, which would put us down to the $78 range if we had a massive sell-off. So I'd be pretty content to be selling or be willing to buy in at 83, 82, that kind of range, because while there's still some more downward side potential, I think that you're going to start to see recovery and people coming in and scooping up cheap shares. So I'd like to make 1% of my money, and I'd probably protect myself by selling an 82 or an 81, depending on where I'm at, and depending on where the price goes tomorrow morning. If it's a down day and it starts trending down to 83, like we saw, and because of no man's land, then you'd probably want to step it up to the next support point, which I think we saw was 81.60. So I'd be looking at selling at 81.50 if we have a down day tomorrow. If we have an up day, then I would be starting to look at I'd be wanting to sell 83s. 81s make 1%, 83s are making almost 2% of your money. I think that's good for now, guys.